once that smaller cap IT company has been Sonata Software. This year has been rather good for them. We have seen a solid traction across the board after the new leadership team joined. And of course, the stock has surged almost 30% and close to around 745 thereabouts. I think there was an adjustment which seems to be missing, but we'll watch out for that one. But we have with us the management of the company joining us. We have Samir Dheer, the managing director and the chief executive officer at Sonata Software joining us on the show. Samir, hi, good to have you. The famous adage goes, separating men from the boys. But what has been happening in the IT sector of late is that these boys are now growing into men with this entire fleet of the second tier and third tier IT companies ramping up now. Talk to us about what kind of journey you have envisaged for Sonata Software, because since you have taken over, there's been quite a bit of transformation already.
I think to your point, this is the season of boys. I think it's probably true, and let me put some color to that. So first of all, I think the market dynamics and the industry dynamics in the last several years, especially post-COVID, has changed quite rapidly. And the change has been predominantly driven by more value as customers have become much more cost conscious and really pulled back the spending given the broader macroeconomic headwinds that are going on. And that in many ways presents an opportunity for companies who can differentiate in the marketplace and can also be agile at the same time. And that's what I think Sonata is beginning to see the benefit of in the most recent quarters that you probably have seen us. I think our teams have done phenomenally well. And part of the reason is that we have a value proposition that resonates with the customer from a modernization perspective. And we believe most of our customers are in somewhere in the spectrum of modernization over a period of time, whether they are modernizing their application estate, they are modernizing their customer-facing estate, or they're modernizing their business operations or data platforms. So really, our proposition has been to help customers modernize through our deep engineering capabilities. And I think that message has by and large resonated quite well. Couple that with the agility that Sonata can bring to help transform is really been the differentiating factor. And that reflects in, if you look at our most recent quarter that we announced the result, a couple of months back, we have been clocking over 4% growth in the last quarter. Prior to that, another 4% growth. Prior quarter to that, another 4% growth. So for the last 3-4 quarters, we have seen a consistent, 4% growth. Which you put this in perspective, most of the industry peers are growing annually between 2 to 5%. So it is quite a good achievement that we're very proud of. But we want to just sustain the momentum. I think we have started off well as a new management team that has come on board in Sonata in the last 18 months or so. We just want to continue the momentum as we move forward.
Right, morning. Now, just to build on that point, aren't these modernization projects most susceptible to a slowdown in discretionary spends? And do you think that it could continue in terms of momentum? Could that slow down?
Yeah, so I think if you look at the broader market thematic, and let's just sort of peel it by industry. You look at the healthcare industry, the notion of value-based care is still very much out there. Because the consumers' loyalty to the payers especially in the US is very low. Actually across the globe is very low. So they do not mind flipping from one service provider to another service provider if they get a better price point. So the whole notion is about value-based care in the healthcare industry, and that's really what our main offerings are, to really help the healthcare customers retain the consumers. So while it looks discretionary spend, but in many ways there is no option, because if as a healthcare company you want to grow your revenue, you have to make sure that your consumers are taken care of. And the same example, if you extrapolate out to the banking side, it is still very much a competitive landscape in the banking world as well, especially as the loans register for most of the banks have dried up, given the high interest rate regime that we are living in. But the consumer spending from a retail perspective, the credit card spending, is still pretty robust. And I think that's where most of our offerings are in the retail banking space, and the Quant acquisition really helped us accelerate the journey. And hence we see a continued momentum in that time frame in there. And juxtapose that with the fact that the technology is rapidly changing as well. And customers are really looking to embrace the newer AI models, the newer techniques and tools that are out there to really help build a stickiness with their consumers. And hence the whole modernization template that we have created is an ongoing process to a large extent. You move from one point to another point, and then by the time you reach the second point, there is a journey to be had to further evolve from there on. And hence, yes, it's a It's a discretionary budget, but it is almost like a mandatory budget from customers' perspective because they cannot do without the growth that they're aspiring to have.
Right. So, would you say that the decision making cycles also have eased a bit because you did talk about closing at least 10 to 15 large deals in this year itself? Is this something which is on track?
Yeah, so we feel pretty confident with the track record that we've had that we can continue to clock away the large deals that we have been talking about. If you look at our past track record, I think practically in every quarter for the last 4 or 5 quarters, we've had announcements of about 2 to 3 large deals. I think there is no reason for us to believe that that trajectory will change. I think we feel pretty good about that. Now, of course, there will be an odd quarter that we might close more, and odd quarter we might close less. But on the whole, the 10 to 12 large deals in a year, I think is still very much a doable target for us, and that's what we are working through it. But let's keep in mind also the macroeconomic conditions are rapidly changing as well. So this is, as we sit here today, is our best estimate. As things change, and we're keeping a very close eye to the market situation and dynamics, we believe we'll make adjustments accordingly. But as we sit here today, we think that's definitely a doable goal for us to have. And if you look at the announcement that we have made, we announced some fairly large deals in the course of the year. We announced our largest European deal. We announced the largest deal ever as a company. And that's been the trend that we continue to see, because as customers get on board with the modernization thinking, the agenda for doing long-term projects just increases dramatically.
Sure, but I also wanted some clarity on the margins and the pricing of the contracts. Now that the supply side pressure of attrition and retaining people is going away, is there some sort of benefit that you're passing on to customers and reducing the pricing at all?
No, I don't believe so. I think if you look at in the most recent quarter, our EBITDA performance was very strong. We don't think there is a pricing pressure. And I think it sort of goes back to what your company stands for. I think in the area and realm that we operate in, which is modernization engineering, I think price is less important for customers. Value is more. And there is a fine difference between the two. If you're delivering the value for the customers, they tend to focus on the outcomes than the input metric, which is price. And that's what been the trend. Now, having said that, as a company, as you've probably seen this in our past announcements, we have said that between 1.5% to 2% of our company revenue will spend in our investment thesis, because we are breaking open new markets, new capabilities, new technology areas. We called it out that we will invest about 1.5% to 2% over the next couple of years till the time we get to our stated goal of about 1.5 billion as a company. We'll do that, but that's nothing to do with the pricing pressure. That's a very deliberate investment strategy to really build scale. And it's an extremely important activity we took on, if you recall, 1.5 years back when I came on board, because when you build scale post the growth, you always have a problem. So in many ways, you have to build scale ahead of growth so that you're ready for the growth that you're going to get. And that's been the thesis with which we operated. And we believe we'll continue to operate that, so that we are setting the company from a scale perspective. And scale has many facets. The scale is in terms of really hiring salespeople at one end, hiring technologists on the other end, geographic expansion on the third end, vertical expansion on the fourth end, solution expansion. So many facets of this scale. And we're really quite bullish about the fact that specifically the progress that we have made in the newer areas like Gen AI, I think those will continue to help us scale the company in a very meaningful way, and hence really provide a value-based offering to our customer rather than a price-sensitive outcome to our customers.
All right, so do you think that margins, they'll be in the 20s range broadly?
So our stated objective has been that we want to get to 1.5 billion at a corporate level revenue on a run rate basis by FY26 end. And that will comprise of 500 million coming from international business and close to about 1 billion coming from the domestic business. And for the international business, we have stated we want to be low 20s EBITDA. And I think we're pretty confident that we can hit that goal by the time we get to FY26. And we are already at 22, 23%. I think we'll be around 21, 22, even 2 years out, despite the investment that we're going to make.
Samir, the third quarter furloughs have been higher than usual or the same, if you could clarify. And also, secondly, what are the risks that you're watching out for from here on for the sector and for your company?
Yeah, it's a great question. So again, multiple parts of your question. Let me try and unpack it. So number one, do we see the momentum continuing? The answer is absolutely yes. What we are worrying is pretty much in line with what the industry is worried about, that the macroeconomic environment is A, very scattered, and B, little confusing right now. While we are seeing good growth momentum go forward, but everybody's trying to piece what is happening in the macroeconomic, right? I mean, the inflation is beginning to come down. The interest rates are still high. The unemployment in US at least is almost at all-time low. So to piece this data together and say what the next year looks like is quite difficult and challenging. But we just, in these times, we just focus and stay close to our customers. And what we are learning from our customers is that their budgets are either flat to slightly up, which is a good sign. That means it's another year of opportunity for Sonata to pull ahead and take wallet share away from our competition, which is what we have done in the last couple of years that we've been talking about. So we believe that will be hopefully a good year ahead for us, and we can take more market share away from our competition, even in an environment where the budgets are either flat to slightly up. So to the last part of your question, what is keeping me awake? I think that whole agility to respond to the market is something that we calibrate often. It is an exercise that we do quite regularly to see are we investing in the right areas, because we take the investment that we have planned about 1.5 to 2% quite seriously, and hence the recalibration of that investment literally every quarter is something that we do, while the broader vision of modernization is absolutely profound and there. But as the large deals inflow is increasing, we have to keep calibrating about our conscious choice we're making from the investment thesis perspective, coupled with the larger macroeconomic situation that we are in, so that we are absolutely sweating out every dollar that we're spending from an investment thesis perspective for the benefit of our of Sonata as well as our shareholders' returns.
Okay, and shareholders' return is something which has been good. Samir, on that note, we let you go. Appreciate you making time and speaking with us. But